This is the 4-hour chart since early May that we started this recent buy model, okay? And recently, we have been just kind of consolidating and pulling back after reaching an external high. But a couple of days ago, we created this SMT here with GBP at 4-hour fair value gaps, which is a major trading idea for us. Now, this SMT at the 4-hour is considered a tag, meaning the price action that is tagging the fair value gap is creating an SMT. We are not comparing it with a candle on the leg that made, okay, the fair value gap. Okay, so let me repeat that. This is SMT on the tag of the fair value gap because it's the same price action, okay, right next to each other as price is happening right now before the move. A price at the fair value gap would be a comparison to a candle to the left here, okay? But if there is no comparison to the left here, or you can't make anything comparable, then we need a tag at the fair value gap, fair value gap tag, not at, but a tag, okay? And these are more of my favorite fair value gap tags right here because I just think they're more real. I prefer to have both. But ever since we've done that, we have gone straight up, okay? Now, as day traders, you know, if you're a New York session trader, it's tough because, you know, you're missing a lot of these moves and you really need to hold these things, you know, through the overnight session, Asia, London, because that's where a lot of these moves are being made. So just looking at the move the past couple of days, we had a pullback into this 1-hour fair value gap. So now we're day trading because now we're on the 1 hour and we're looking at 1-hour fair value gaps and we're going to look to execute on a 5-minute. Okay. So yesterday, early in the morning, we had this setup. We went over it in the review. We had the SMT here, okay, and then we had the setup, and then we had a 5-minute buy model here, and price came up. It broke external liquidity on both. Bam. Okay, now, as we go higher, okay, we just keep doing textbook things, okay? These are all breakaway gaps. So now we're at this gap right here, okay? And what do we see? I'm going to make it really big. Really big, okay? We have a tag of the 1-hour fair value gap. And inside that tag, okay, we have, let's see, it's right. Yep, we have SMT right there. That's the SMT. It's this candle. Yep. We have SMT. So now we have SMT at a 1-hour fair value gap on the tag. Now we go down to a 5-minute, okay, for our buy model. And let's see if it gave us a decent entry. Okay, here is the, okay, we got a tag right here. Okay, the GBP was clear because we had this gap. And when we broke it, that's the signal. Here, it would be right here. Once we break above that, because don't forget, this is SMT. So the euro is not going to really take out liquidity like as clear as the GBP does. Okay, so now we have to look at internal liquidity. And as you can see, this move right down here, this move right up here violated this fair value gap. Okay, and now we are pushing higher. Not the cleanest setup. I like to see a little bit better. It was definitely much cleaner on the GBP. Okay, but when you're trading a stronger model, you're not going to get a manipulation lower. So you have to kind of make do. The other way to have done this, okay, and I always say mark these out. This is the change of state of delivery. That line right there. So once we really close above that, okay, then you can take a trade. Okay, and listen, if you bought on this one or this one or this one, it doesn't matter. On the change of state of delivery plays, I like to see a strong close and at least half the candle, okay, above the CISD. And in this case, that didn't happen till here. And once it did, it still retraced back to the CISD, and then you had no drawdown. So that's why CISD is a little subjective. That's why I always prefer the inverse fair value gap model if it is cleaner. But sometimes you have to use the CISD, and I always say make sure you mark them out. Okay, so I always mark out two CISDs. Okay, this is another CISD. Why is this another CASD? Because this was the series of down moves, okay, that created that SMT inside that fair value gap. Okay, and then there are different trains of thought. Some will say that's a change of state of delivery because that's the last series. So I think it's very subjective. So I like to kind of mark it up this way to give me a couple of ideas of different change of state of deliveries. This to me is obvious, and a nice close above it resulted in a really, really nice trade. Okay, so that's that. Okay, and then we come into overnight last night, and we're coming into this fair value gap after we punch up. And what happens? Okay, this move does not have an SMT. Okay, they both go higher, but then price returns on the Euro USD, but it doesn't on the GBP USD. Okay, so what happens here? We now have another SMT on the tag. And on the tag means it's happening right inside that fair value gap. These bars are an SMT. So now let's go to the 5 minute. Okay. On the 5 minute now, we have a clear, much clearer. Okay. And on the pound, see, this is nice because we're buying the euro and it's on the euro. So it's much cleaner now. And this is what I mean. We are delivering from a fair value gap. Okay. We took out internal liquidity. We reversed back up and inversed a fair value gap. And that's the 5 minute trade up to external highs right here. Okay. Anything higher is just a bonus. These are the external highs. If it displaces above, you can wait and see if it displaces above. And if it does, like this, it displaces above, you just put your stop right at the that level, because if it does return there right away, it's probably going to go back through. You want this to be a breakaway candle. What do I mean? It means it didn't get mitigated until it still went higher. Okay, and then obviously wait for an inverse fair value gap on a short-term chart, which happens right here. So you were able to sneak out maybe another 12, 13 pips. Hey, every dollar counts. Okay, this setup right here, honestly, if I was to write a book about our model, this would be the example. I just showed you how to go from a 4 hour. Actually, we're going from a daily fair value gap to a 4 hour, down to a 1 hour so we can day trade, and then from that 1 hour down to a 5 minute where we can execute. This is textbook trade, textbook trade plan. The trade plan and then the entry model. And remember, our entry model is it's got to deliver from a fair value gap, okay, both a higher time frame and the same time frame. We need an SMT. Okay, we need to take out some internal liquidity, some internal low. Doesn't have to be major, just has to be some internal low. We need a fair value gap displacement below that low, and then an inverse back above with momentum and a strong close above and clear targets. That's our entry model. Again, that's just the entry model. Our entry model needs context. What's our context? We need to deliver from a higher time frame for a value gap. And you know the time frames. Monthly to daily, we execute. Weekly, we execute on a 4 hour. Daily, we execute on an hour. 4 hour, we execute on a 15 minute. 1 hour, we execute on a 5 minute. 15 minute on a 1 minute. 5 minute on a 30 second. In this case, we're concentrating mostly on 1 hour fair value gaps and sometimes 15 minutes, especially when we go down to the NQ. That's our sweet spot. So you have a trading plan with context, deliver from a higher time frame fair value gap. Okay, has to have SMT. Okay, and then our buy model goes into effect and has to confirm. That's it. That's the 3 steps. So we have a 3-step plan, and the 3rd step is the entry model, and the entry model is a 5-step plan.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.